Hey investors, Dave Hathaway. Welcome back to the channel where we discuss real estate investing and building wealth. Today I have a special discussion. It is on the BRRRR method or the BRRRR strategy. If you haven't heard of this method, it's pretty prevalent within the real estate investment community. You are going to be in for a treat. This method has single-handedly built our 50-unit portfolio. It is a way to build massive amounts of wealth in short amounts of time just in how you utilize this strategy. In this video, we are going to chat about what the BRRRR method is, the main goals and purpose of the BRRRR method, how it generates massive wealth when used properly, and then at the very end of the video, we're going to give you an example of how it works so you can see the numbers and how it would work real time for you. So it really conceptualized the entire thing. Let's get into it. What the heck is the BRRRR method? It's BRRRR. 4 R's. I think I said 4 R's. But it's buy, rehab, rent, refinance, repeat. And we're going to dive right into it. So the first letter is buy. So there's 2 things that you're going to need to do to effectively do this strategy. One is buy the property at a discount, and the second is make sure the property cash flows. If you don't do either of those, then you haven't done this effectively. So what does it mean to buy the property at a discount? And in the ideal world, or if you're doing this method perfectly, you're going to want to buy the property at a 70 to 75% ARV. ARV is after repair value. So when you're looking at purchasing a property, and let's say that property is $100,000 and you think that it's going to take $50,000 to rehab, that means you're all in for $150,000. And that means 70 to 75% of the ARV. So that means that property's value should be around $220,000 after you're done with your rehab. Now, we also mentioned that the property has to cash flow. We're not going to go into extreme depth on this one. We have done a video on how to analyze properties. It shows you how to analyze for cash flow, and you can find a link in the description for how to analyze a cash flowing property. But those are your 2 big ones. Buy the property at a discount, make sure that the property cash flows. I want to also add in here is there's no secret sauce. You don't need to purchase the property off market. These properties can be on MLS. We've done a lot of BRRRR strategy properties that we have purchased off the MLS even more recently. Don't think that properties that are on realtor.com or on the MLS or on Zillow just aren't going to work, that you have to find them off market. That's not the case. We've done it over and over and over. All right, let's move on to the next letter, which is R for rehab. Now, this should be relatively common sense, but you're going to have to rehab the property most of the time. Often, if a property is really nice, you're not going to buy it for the discount. Often, you're solving people's problems, and that might just be, I don't want to rehab the property, so I'm going to give the property to you at a discount. This is where you're putting in sweat equity. If you haven't heard that term, your rehab, and depending on your skills, whether you're doing it, whether you're hiring a GC, whether you're GCing out yourself, whatever that means, you're going to add value to that property. And so you're going to be at the 70 to 75% ARV. The next R is for rent. And this one I don't want to skip over. It's super important that you screen your tenants, number one, but either you are really diligent on your own self-management, which we created a how to self-manage your portfolio or rental properties. Here's the playlist that goes over a bunch of different areas of how to self-manage your portfolio. But it's just super important that you screen your tenants. That's the one touch you get and the one time you get to say no. Once you place a tenant, if you place the wrong tenant, it's a pain in the butt and it's going to cost you time and money to get them out of the property. So don't just skip over this in the BRRRR method to get to the refinance. It will bite you in the butt if you're not taking time on your screening and running the property out. That leads us right into the next R, which is refinancing the property. And often when you purchase these properties, you're going to be purchasing them in a myriad of ways. You're either going to be paying cash for them, you're going to have investors, you're going to purchase the properties with a hard money loan, and you're going to want to refinance out away from that hard money loan interest rate. Often that's going to be 10% or 12%, and you're going to want to refinance into a DSCR loan or debt service coverage ratio loan. Also have a bunch of videos on DSCR loans. So if you're not familiar with that, I definitely say check out those videos that will get you more up to date on how those build wealth as well. And you're going to put that refinance into a 30-year fixed mortgage. And that's where you're going to be able to pull out the money that you initially put in the property. And this is where this strategy gets super powerful, because it allows you to then take the money that you initially put in to purchase and renovate the property. You're pulling it out, and then you're going to add it in to the next property that you're going to purchase and do the same thing again. And that's what the last R comes in for, repeat. So let's go over a real life example here. But before we do that, if you guys have found value in this video or any of our other videos, we'd be honored if you hit the thumbs up button and subscribe to the channel so we can help you on your path to financial freedom. So with the real life example, again, we're looking for cash flowing properties that we can purchase at a discount. And we're going to give you the example that we found a property that we think the ARV is $250,000. And how you can determine ARV of properties is by comps. And comps, that is short for comparable properties or comparable sales. What that means is you're going to look at properties that have sold right around that property that are very similar to that property. So if you're looking at a 3-bedroom, 2-bathroom townhome, you're going to try to find other 3-bedroom, 2-bathroom townhomes. And if a bunch of them on the same block are right in the same area sold for $250,000, then you know your ARV is about $250,000. So if you found a property that you know is worth $250,000 after it gets rehabbed and it cash flows, so after you were to refinance the property, that's going to give you some cash flow after the mortgage and all your expenses are paid, and you realize that, hey, this property is going to take about $50,000 to repair, then you're going to realize that your max purchase price on this property is going to be $125,000. $125,000 would be your purchase price. $50,000 would be your rehab or your repair budget. So your all-in would be $175,000 on the property, and that would be 70% of the $250,000 ARV. So if those were your numbers and that was the property, you could go through these steps, do what we just talked about, and then at the end, refinance your money back out and put it into the next property. So you start to see how you can recycle your money over and over and over again. And then you can build a portfolio with not new dollars that you earned, with old dollars that you're just recycling over. Now, lastly, we have a playlist called Invest in Baltimore by the Numbers, where it goes over specific examples of our own properties. You can dissect, see the renovation, see why we purchased the property, see all the numbers of the rehabs, what we anticipated the rehab was going to be, what the rehab was, how much we made on rents, what the return on investments are, and you can see how powerful this BRRRR strategy works in that Invest in Baltimore by the Numbers. This is what it looks like. We'll put a link down in the description. If you guys have any questions or I need to go in depth on any more things about the BRRRR strategy, reach out to us in the comments and join our private Facebook group so we can help you, encourage you to become financially free. I'll see you on another episode.